Okay, everybody, it's me, Gregory Mannarino. I have to tell you something. It's a secret, but let's not let anyone in on it. Right now, the market is still open. Even though this is my post-market wrap-up, it is now 12:09 p.m. Pacific Standard Time on this lovely Wednesday. Did I say the date? November 16, 2022. The reason why I am doing this video early, most of you out here know I am kind of a drag racer. I got this 69 Camaro race car, and I intend to race it later today. Actually, this weekend here in Vegas is the Streetcar Super Nationals. I want to enter that car in the race. Well, today they're having time trials. So I want to get this car going. I only ran it one time since I rebuilt it by myself. Okay. 11:27 quarter mile. I can do a lot better than that. That was my first run. Had a couple of problems I had to fix, which I have addressed. So I'm very curious as to see what the car is going to do. Probably by the time you're watching this video blog, I will be screaming across down the quarter mile. So I'm looking forward to that anyway. So as I said, market is still open. Let's cover a few things, and then I have a page of stuff we need to talk about. Right now, the market isn't doing too much. A little pressure on the major indices. Okay, nothing spectacular here. The U.S. dollar relatively flat. 10-year yield lower. MMRI has dropped 243 last time I looked at it. So risk in the market is dropping. Okay, what's playing into this? Who freaking knows? Central banks are buying all the debt again, period, the end. It's nobody else. No other entity on this planet is buying the debt here besides central banks. That's all. They are desperate here to give the illusion of stability. And if they can keep that up, if they can keep the illusion of stability going, and the US dollar on a relative basis gets weaker, well, okay, guess where the stock market's going? You understand? You see what I'm doing here? It's pretty easy to understand. Does that mean we're never going to crash and we're never going to collapse? Absolutely not. I mean, we're already in a global economic meltdown, and it continues to get worse. As a matter of fact, we got some information on that, which I'll cover in just a moment here, from Bank of America. Again, another warning. Again, like I said, we'll cover it. But fact of the matter is, we're in a currency collapse. That's the root cause of inflation. It has nothing to do with rates. You all know that. I'm not talking about it again. Here in the United States, it's over. The economy's dead and buried. It's been on life support since the last meltdown here. It's been propped up on oceans of easy money, with the current president, the last president, and the one before him continuing to outspend any presidents in the history of the world, debt ballooning, and that's where it's going to go, no matter who wins the next election. Okay, it's going to change? Absolutely not. You think the debt-based economic model is just miraculously going to go away and everything's going to turn out to be fine? How about no? Absolutely not. Okay, it doesn't matter. The central banks run the show. You all know that. They're determined to kill the current system, the current economy on a global scale, and the financial system through issuing a new system. And whatever president is going to play ball with them is the one who's going to win the White House. Okay, and just in case you don't know this right now, presidents are you don't get to choose. Okay, I think that's pretty evident. Anyway, it's the whoever's going to fulfill the agenda here of the military-industrial complex, the agenda of central banks. That's the guy who's going to get in, period. Anyway, so with that said, I covered the markets pretty much. Bitcoin under some pressure, gold and silver relatively flat. Crude oil ain't doing nothing spectacular today. But risk in the market is falling. Risk in the market is falling. Could this all change on a dime? Absolutely, it could change on a dime. But I believe central banks are right now going to go out of their way to at least give the illusion that there is some stability here in the debt market. And if they can pull that off, and if the dollar can get weaker, stocks are going up. Nothing else matters here. The whole market is being driven by action in the debt market. Forward guidance, PE ratios, corporate earnings, it's all shit. Okay, it doesn't matter anymore. When you have a managed system, And that's what we have here now. We do not have even the slightest resemblance of a free market anymore, or a free market economy anywhere in the world. Well, then this is what you get. And I guess, what else would you expect? But let's talk a little further here. So on the economic front, U.S. manufacturing, are you ready for this? Unexpectedly and continues to fall with production down. But no one saw this coming. Nobody. How about you and I? Yeah, I think we know, because our economy is in free fall. And it's just not just a phenomenon under President Mummy Man Bidenstein. Everyone likes to point their fingers. Okay, whatever. It doesn't matter what freak they have up there. They're all freaks. None of them work for you as much as you might believe they do. They don't. Here we go. U.S. home builder sentiment falls again. This is 11 straight months here. Home affordability, are you ready for this? At a 37-year low. That's because we're doing so well and our economy is so strong. Now, this is something I want you to pay attention to right here. So the Federal Reserve ran a study. Okay, they ran a study. And this is what they found out. Okay, the Federal Reserve is projecting that home prices will fall another 20% from where they are today as they continue to, crush the economy, raise rates, which have nothing to do with inflation, but they're going to sell you that lie. They're going to continue to sell you that lie. And the more they say it, the more people are going to believe it. Now here's something else here. We're getting all this misleading information here about retail sales and consumer spending. Let me just enlighten you a little bit. If Target is any kind of a bellwether, well, they're telling us that their sales missed the mark, but people are spending more. So people are spending more to get less. Can I please get a duh? I mean, we all shop. It's just frankly retarded. Okay, I'm going to use the R word, and I don't know how many people are just unsubscribed, but okay, see you later if you can't handle it. So this is extremely misleading. Could you imagine just for a nanosecond that the mainstream propaganda financial systems are misleading you? They're telling you that they're spending more. Retail sales are great. Sure, they're spending more, but retail sales, take Target's word for it, and the CEO of freaking Walmart that are telling you, okay, these are the two biggest freaking retailers here around. They're telling you things are not very good. But again, you're going to be sold a lie. Here's something else you need to pay attention to. It's kind of a joke in a way. So Bank of America is warning yet again on the economy. All indicators are pointing towards a further downturn. Oh, where have I heard that before? Maybe right here. You see, you and I have spoken about that. How many times have I told you, have we discussed that forward-looking indicators are all every single one of them is pointing down. So our economy is going to free fall as central banks continue to fulfill their end game, raise rates, and lie to you and tell you that, they got to do this because they want to tame inflation. But then we got Bostic. We got Fed President Bostic today who said, hey, guess what, guys and girls? Hello. It ain't working. Duh. Because it's not meant to work. Never was meant to work. You all know that. Anyway. So what do you think about all this, people? It's a freak show on an epic scale. So as I said, right now the stock market not doing too much, but risk is dropping. Risk is dropping, at least according to the MMRI. Go check it out. It was a 243 last time I looked at it. 10-year yield falling. Who's buying the debt? Who is buying the debt? Yeah, I'm in a great mood because very soon I'm going to have my foot on the floorboard with my dual quad tunnel ram small block screaming at around 7,500 RPM as I slam it into gear. Oh, that's going to be just beautiful. I can't wait. And I'll be doing that pretty soon. I get such a rush out of it, you have no idea. It's like it's an amazing feeling, first of all, doing the burnout, going up there, going through the water box, doing your burnout, heating up those rear slicks so they stick, and then staging the car, looking at that guy next to you. You really run your own race. I don't care who sits next to me, but you want to beat the guy or the girl off the line. The last time I ran the car, I ran a terrible light because I got overly distracted. But you want to get off the line first, and then when you just feel that power shoving you into that seat and things just rushing by you so fast and the engine screaming, I don't know. It's the ultimate high to me. It really is. See, I don't need drugs. I say no to drugs, but I say yes to adrenaline. Ooh, is adrenaline a drug? I don't know, but I'm gonna get my fix in just a little bit. All right, look, people, this guy here loves you a lot. I mean that. I'll let you know how I do tomorrow morning. I'll tell you my numbers. Hopefully, I don't break the car. We'll see. That is a distinct possibility. Anyway, this guy here really loves you a lot, people, and I mean that from the heart. We're a team. We got each other's backs, and that's it. I will see all of you in the morning. That's all.